Okay, what's up, everybody? Happy New Year in February. It's been a minute, but let's go ahead and get into this. We have been tracking this range. I've been tracking this bearish range, and in previous videos explained why I wanted this bearish range to play out, even though we're at all-time highs, or we were tempting all-time highs here on NQ for the longest time. And so we've been tracking this for about, December 2016 to now February, which is almost 2.5, almost 3 months now, which is awesome. But it was also a very good exercise for me to see if I truly understand the market structural principles and overall just reading markets inside of ranges and understanding how liquidity is grabbed, how liquidity is purged, how structure is formed, how ranges form, how technical analysis can be decoupled from fundamental analysis, but also can give insight into fundamental moves that most people in the retail market are not privy to. And because I'm one of the retail people, I'm not privy to the insider trading or the inside negotiations and deals that happen. I'm only can look at the charts here and analyze when those moves will occur, which is why for a retail trader, I often say that the price action is deterministic, but the timing is stochastic, and that's because I don't have the information to make those decisions at the time. Now, if I was on the inside, i.e., if I was on Wall Street in the rooms when the deals are going down, then I would say that everything is deterministic. But this exercise, understanding and playing in this trading range, tracking this trading range, trading inside of this current trading range, I now can say that I fully understand how this market runs, and moving forward, we'll see a lot more going on, right? But I'm just really happy that it played out the way it did. I did catch losses and wins, obviously, inside of the range, expecting, some of these price runs to go lower and actually attack these liquidity points here, and ultimately this one here. That's what I'm looking for as the next target if we're going to continue this bearish range. But overall, I'm satisfied with price mitigating, this initial liquidity point, because this is, the high of the range, low of the range, but this low of the range is actually equal lows, relatively equal lows here with this liquidity point there, which I'll mark up like so. Boom. So all right. But yeah, so let's go ahead and get into it. So firstly, technical analysis fully works. I stand by that now 100%. I stand by the market manipulation hypothesis. I stand by the liquidity, grab liquidity principle hypothesis, right? Which everyone has, their take on, or rendition or edition, whatever you want to call it, of these different concepts and principles. But after seeing it in action and following it very closely for the past 2-3 months, I fully understand, fully subscribe to it, and fully know that you don't need to have fundamental knowledge backing your trading if you understand market structure, liquidity, and that's it. If you understand market structure on the technical analysis side and liquidity, it's really, really simple to track and trade these markets. Now, that doesn't mean fundamental analysis won't help you. It actually will inform you on real world events, but trading these markets, it's more of a emotional and structural thing that you have to worry about. It's not the best, rant on this, but more or less what I'm trying to say is that technical analysis works 100% by itself if you want to do that way. Fundamental analysis works. Every trading model works. But if you are looking to find or to trade a technical analysis model, this to me proved that I can definitely do it, and it's validated and verified in trading the way I trade, and seeing that the fundamental moves actually align with the technical analysis when I'm doing it decoupled from each other. So another way to say it is I can do technical analysis and it lines up with fundamental analysis plays to a precision that the stochastic nature of the timing is less. Still don't know if that made sense to you guys or if it made sense to me, but yeah. But nonetheless, I'll go over here and show you why I decided that I wanted to mark this as the bearish range in the first place. So I'm going to go ahead and delete this here and show you how I came to this conclusion. So obviously, if I zoom all the way out, the NASDAQ is bullish, right? If I were to go to, say, the monthly time frame, this is no doubt bullish, right? We're creating series of lower or higher highs and higher lows. But in this particular area, looking at it from the daily perspective or the macro perspective, which I consider the daily time frame where I start my analysis for trading, I was like, oh, back when I think it was in November, around November, October, I started seeing influence of price changing structure and showing bearish intent. And what do I mean by that? Well, in previous videos, you saw when I was trading back in November, if you see my November videos, I was trading around this area, and I tracked this from saying, okay, we created a low, a high, a low, a high, a low, a high, a low, a high, and then we broke two higher lows here, pulled back, and then broke the neck and continued to build the bearish structure here. And so that, to me, based off the market structure principles, market structure concepts, solidified that we are in for a bearish market, right? Just that simple break of structure here. So I'll make it a little bit cleaner. So that break of structure there, and if you wanted to, I mean, you could call this the break of structure. I did call this a low, but I'm going to say it's this one, but for completeness sake, I'll put that there as well. Let me make this there. Cool. So these two breaks of structure, and then if we were to continue the bullish structure, then I would have seen that this low would have been insignificant as a structural point, as if this high was to break the previous high here. But because it didn't, and it filled inefficient pricing here and decided to go lower, this indicated to me that we have created a top or the high point of a potential bearish range. And so now all we needed was to follow the bearish price action to create the low of the range, and then we'll have a range created. And once that occurred, we then began to play inside of the range. Now, a cool tidbit that I like to see when a range is created to know that it's really a true range is I would like to see a lot of consolidation and a lot of green and black candles, in this case, bearish and bullish candles, around the 50% of that equilibrium of that trading range. And so that indicated to me that we were inside of a trading range. Now, this is where I can't exactly time when we're going to break out of a range, but knowing that the principle of understanding where liquidity is, that I can find places inside of the premium and the discount side of the range to play until all of the liquidity is mitigated or balanced inside of the range. And that's when price will generate the bearish run, very low, very uninterrupted, very voluminous, very high velocity bearish run, or if it was a bullish range, a very high velocity, high volume bullish run. In this particular case, even though we were giving these bearish runs and price was immediately running back into the premium, and all of the market participants on the news and stuff, they were saying, oh yeah, we're still going to continue bullish market, blah, blah, blah. Nvidia's doing great because the NASDAQ is the tracking of the top 100 technology companies in America. We're looking at the Magnificent Seven. We're looking at Amazon, Apple, Nvidia, etc. from the fundamental perspective, but understanding that, hey, no, we on the structural or technical analysis perspective, we've created bearish price action. So if anything, I'm going to stick to the bias now that follows bearish price action. And so despite, Nvidia having great earnings, pushing up the market or whatever, I'm going to stick to the technical analysis bias, and whatever happens with that, I could be wrong, but whatever happens with that, I'm going to trade that bias and only look for trades in the premium and targeting, liquidity to the low side of the range, really targeting that range low. And so ultimately what I saw was it was really, really, really easy to catch these sells from the premium. As you can see, they're very high volume, very quick runs versus the bullish runs here inside of this bearish trading range. And that's one of the characteristics, if you're going to trade this way and understanding the ranges, is you want to know what kind of range you're in, and that'll indicate what kind of moves will be easy to catch and will be highly profitable, highly high risk to reward trade setups in low time, really, right? You want high profit, low time trades. And in this particular case, because this was a bearish range, if you caught this last one, well, obviously that is a very high profit, low time trade. But yeah, so ultimately though, what I'm looking at moving forward, now that we have broke this range and we have solidified that we are in a bearish market currently, and because this was a break of structure, as in the black candle here closed below the range low here, I would like to see continuation to take out more liquidity points. So the first liquidity point that I would like to see mitigated would be this one, which is the next, significant low that created a high in this bullish trending market. And then if we are to continue, or once we reach this low, what I want to see, do we break structure or do we grab liquidity? And if we grab liquidity, then I want to see, do we pull back higher? But because, like I said, the bias right now is bearish, I am going to look for sells, because now we're not in a bearish range anymore. We're in a bearish price run. We're in continuation mode. We're out of range mode and we're in continuation or run mode, essentially, right? So there's two states to the markets. It's ranging or it's running. And right now we've broken out of the range, which indicates that we are the sellers have won and we're now running. So if we're going to continue this run, then the next target for this run logically would be the previous low, or the next low, the next liquidity point, next structural point here. And then if we were to break structure, well, then we just keep picking, the previous lows as our structural points, liquidity points. So it'll be that low next. And then what's the next one? Well, it would be that one. And so on and so forth, right? But what we want to be aware of is that at every single structural point, we want to be aware of what happens there. Do we break structure or do we grab liquidity? And so what does that mean specifically? Let me see here, grab this. Where is it? Brush. If we were to say this is a low, if we were to break structure, meaning that the move is sustained here, then this to me indicates continuation of the current move. But on the flip side, if we fail to break structure and we pull back as a liquidity grab, that's when we can time reversals by going down to the micro or the nano perspective and looking for opportunities in the structure that's formed inside of that liquidity grab and catch trades to anticipate runs to the upside. Now, just because we do get a reversal does not mean that it will be sustained, but it does mean that we will get a reversal, because liquidity grabs more often than not indicate reversals. And so essentially you can study that inside of ranges, because that's all that's happening when you get reversals inside of ranges, is you're grabbing liquidity and you're changing direction. And that's all of these points where you get these highs and lows. You can see, well, one that's really easy to see is you got a liquidity grab here, right? Then you have liquidity grab here. You can see clearly that this low was there. We grabbed liquidity just below it and we drove higher. And if I were to zoom into that section there, I guarantee you there was structure that formed that would have allowed you to enter into a trade to enter in a trade that would allow you to capitalize going towards the premium side of that range. And as you can see, this is that liquidity grab specifically. Then we get that consolidation. You know, we get bullish price action forming, and then you have your opportunities based off your entry criterion on how to take trades off of this. And it gave multiple opportunities for day trades and for potential swing trades into the premium of that range, with the last one that I would have seen would have been off of, let me not do that, would have been off of this sponsored candle here, right, at the open, and that would have been the trade that I would have taken here. And if we were looking at other potential opportunities, knowing that this is hindsight, I would have been probably really aggressive and tried to take this, despite it going, I think, did it take that low? Well, let's see here. Ooh, why is this doing this? No, it didn't take that low. Yeah, so I would have tried to take this here as well off the open there, knowing that price didn't take that low there. That would have been a very, very interesting trade. But because this is futures, there's no, let's see, spread. So I would have been safe in that trade, and that would have been a great trade there. But yeah, all that to say that we're still looking currently for continuation of this bearish market into the new year. And on the fundamental side, everything is indicating bearishness, right? If we're looking at NQ specifically, the AI market infrastructure it's looming. Everyone's skeptical about it because of DeepSeek. Trump, if you're looking at from the presidential side of it, you're looking at tariffs from Trump, so everyone's scared. So we're looking at a lot of dumping of market liquidity, and so we're going to push lower to back into a safe haven, at least, or to a deeper liquidity pool that would support a lot of these positions here at the higher level, or liquidate a lot of these positions at the higher level until we get to a safer place where the market can begin ranging again, and then we get trades and actual economic movement. And so I like to think of these ranges as economic action that's occurring, and these runs as the profiting or the, losing of these, or not losing, but profiting of the trading that happens inside of these ranges, right? So I threw out a lot of information here, but all in all, it's time to get some money. Let's do this. Peace.